Welcome back to CryptosRUs. I am George. We're all George. So tonight, day before the 4th of July, Independence Day, I know some of you guys are bored. You're sitting at home wondering what to do, which is why I've decided to stream and talk about Michael Saylor and why he is so bullish. He just conducted another interview. Seriously, if Michael's been doing interviews left and right, I wonder if he has any time for anything else. But there are some interesting things said in this interview. And I think it shows why he is so bullish on Bitcoin, or it kind of explains why. And I want to break it down for you guys and give you my response and my overall thoughts. And I thought you guys would enjoy it the day before 4th of July. At least those of you guys in the US. If you're elsewhere, this is a normal Saturday night. So thanks for tuning in. As always, smash a like, subscribe to the channel. 2 streams every day, 11:30 and 8:30 p.m. Central Standard Time. Although on weekends, I'm a little off. So make sure you hit that notification bell so you get notified. And follow me on Twitter, Facebook, Instagram, TikTok, and CryptosRUs.com. All right, guys. Welcome. So let's do this. I'm just going to dive right in. I'm not going to take too much of your time. This is, again, a very, very long interview. Very long interview indeed. And in fact, I don't know who this person is, so I had to look it up. And this was conducted today with Northman trader Sven Henrich. Okay? And who is Sven Henrich? Well, I was looking at it. He's the founder and lead market strategist for Northman Trader, highly respected technical analyst. Of course, if it's your own bio on your own webpage, you have to put in, you have to make yourself sound good, right? So, highly respected technical analyst and commentator about markets and macroeconomic environment, and is a frequent contributor to CNBC, CNN Business, and to MarketWatch. He is well known for his diligent technical directional macro analysis of the global equity markets. Sounds very, very impressive. If I write a bio about myself, I need to copy Mr. Henrich here. Very, very impressive sounding. But what prompted this? Now, I have a thing. Now I know what Michael, what he responds to. He responds to negativity. So I found out the reason why Ben Cohen was able to get his interview was because he was critical of Michael. And the same thing with Mr. Henrich. So he responded to something Michael said, and he's like, past performance, no guarantee of future results. And then they basically went back and forth. Look at Michael took it very, very seriously. Look at how much he responded. And they went back and forth, and then they started talking about gold, regulatory concerns, and even Janet Yellen and how they're going to convince everyone, right? So this was maybe a week ago. So that is why he decided to go on his show. All right. So actually, I forgot to link this. After stream, I'll put this in the description, or you can search on YouTube and you can find it. Again, like the last interview that I covered, which was crazy long with Ben, right? 2 hours and 20 minutes. This one is a little bit shorter, but still, 1 hour and 46. So I watched most of it. I've highlighted the important things, and I'm just going to discuss it and play a few things for you, because the most important thing about this interview, I think, came at the very, very beginning. Sven is basically saying, I need some convincing. I'm not convinced that Bitcoin is here to stay, that it's going to keep going like what you said, Michael, right? And Michael, again, he gives an answer that's 30 minutes long, okay? 30 minutes long, which is quite long. But the very beginning, he goes into detail, like the type of investor he was, and it could be is he still is, right? And this is why he's so bullish on Bitcoin, because he has this knack for finding trends, technology trends, and sticking with it. And he definitely believes that Bitcoin is a technology trend. So first off, I want to play this at the very beginning, because I think it's very, very important for you guys to hear. And then we'll go from there. All right. Okay, so let me set this up. I got that turned off. I got this. All right, let's do this.
Don't know all this.
Look, I think that we can look at it from a macroeconomic point of view as an asset class. And then there's another way to look at it as a technology trend. So let's start it with macroeconomics. Look, I've been in business for 32 years, so I know what it's like to run a private company. I ran a private company for a while. We came public in 1998. I know what it's like to run a public company. I've been a public company officer for 22 years. So I know what it's like to be a corporate executive in private and public operations. I also have been a tech investor. You know, I invested, I $500 million portfolio, made $500 million on tech stocks, Apple, Amazon, Facebook, Google, bought them all. I made fortunes on Amazon multiple times. I bought the stock, watched it run up. I bought the converts when they were busted in the early time of the century. Then I sold them, which was an awful mistake. And then I bought back into Amazon 2010 when people told me I was crazy, and at $250 a share, and I rode that up. So I've got an equity investor's view. I know how tech investors think. I know how public company officers think. I know what it's like to run a private tech operation. I also am an interest rate investor. I'm short the 30s, so I have a large position in 30-year swaps where, you know, when the 30-year rate went to 72 basis points, you could basically borrow money for 30 years at 72 basis points. In March of last year, I swapped out, I did a huge derivative transaction to short that. So in essence, my bet was interest rates will be more than 72 basis points for the next 30 years. And my thinking was, if the government wants to give me money for the rest of my life for less than 1% interest, then maybe I should take it. It's not the same as borrowing. It's not the same as borrowing hundreds of millions of dollars at 72 basis points when you do the swap, right? Because you have to post collateral mark to market. But I have a sense of what it's like in the interest rate market. I have a sense of what it's like in the tech and the equity market. And I have these other sensitivities. So how do I get to where I am today? Well, Sven, like you, I sense that you're frustrated that price discovery has disappeared from large.
All right, I'm going to stop right there. So now I'm watching the comments. Based on what you guys are saying, you're like, oh, he's not very humble, right? The point is, I think, at least, I'm interpreting for Michael. I think the point is he's trying to establish that he has a track record of identifying tech and getting in early and made a fortune. He corrected himself. He didn't just have a $500 million portfolio with tech stock. He made $500 million. So he was probably a billionaire already before he got into Bitcoin, right? It's just one of those hidden billionaires that not a whole lot of people know about. So he's trying to explain that, yes, I kind of know what I'm talking about, right? Not only have I been investing for 30 years, I've been an officer of a public trade company for the last 20 years. And yes, I know how to get in early, tech early, like Microsoft, Google, Amazon, and so forth, right? And I've made a fortune on them. What's also interesting is he said he was short 30-year bond. So, wow. So that I don't think I've ever heard him say that before, that he's an interest guy, and he knows that interest is going to go higher because of what the government is doing with their printing, right? Probably another reason why he likes Bitcoin, but that's something new. I never heard him say that before. But anyways, I think this is important. Although I'm going to be a little bit critical based on this, is because this was exactly what Ben Cohen was trying to get out of Michael. I know that they got off to a rough start Michael was being a little offensive. Ben was being a little defensive. So the interview didn't go off as well as it should have. But this was what Ben was trying to ask Michael. Like, hey, do you invest in anything else, right, besides Bitcoin? Is it smart to go 100% in Bitcoin? Right, and apparently right now, right, you could tell Michael is a savvy, I guess, investor. And does he still hold Microsoft, Amazon, and Google and stuff? One wonders. He never confirmed whether or not he sold them all. It sounds like if he's been holding this long, he might be still holding them. And of course, he did just admit that he shorted a 30-year bond or 30-year notes. So he does invest in that too. So this is something that he hasn't said before. I think it's interesting. I don't think it's him bragging. I think this is really just him trying to say, listen, I know how to get in early. I know how to make fortunes with this. So that's why I'm in Bitcoin. But it's kind of interesting that it does show he does, at least he did invest in other things. And it sounds like he still does, but he doesn't really talk about them. And then I'm going to skip forward because from the 6:44 mark all the way to like 30 minutes, okay, to 30 minutes, he goes on and talks about Bitcoin and, of course, things that you have heard of before, how it's digital property and it's non-sovereign and it's like buying a piece of Manhattan. It's the stuff that you have heard of before. So I'm going to skip through it a little bit. But during this 30 minutes, he also talks about portfolio strategy. Again, something that Ben tried to ask him about. And Michael basically said, you know what? Portfolio strategy is kind of nonsense because it doesn't take into account like a dominant figure or dominant company that may come in the future. Because if you start diversifying away from your winners into losers, essentially, then you're going to lose out on all the gains because the ones that you diversify from, let's say Apple, he makes example of Apple so much, then you would have lost money. It would have been stupid to diversify from Apple. Why would you, right? So again, he discounts portfolio strategy. And of course, he also talks about, I'm going to get to it in a little bit, throughout this video, like Mr. Henrich is like a chartist, a strategic guy. And Michael admits that he's not a chartist at all. He does not follow charts. He invests for long term. He even says within the next 1 to 2 years, he doesn't even know where Bitcoin is going, but he knows long term, he knows Bitcoin is going up. So that's the first part. Let me skip to about the 30-minute mark. So a long answer, and then here, let's play this.
The Fed tried to raise rates, and seriously,
Our conversation, but hopefully it gives you my point of view and why I think what I think right now.
no, I appreciate that. That's fascinating. Appreciate also the deep dive into your business background and how you've been thinking about the world in terms of the evolution of it all. And obviously, I think we agree on is this all is driven. Also, your evolution is driven in a way by the just historic actions that we're seeing by central banks across the globe. You mentioned euro swaps. I mean, the ECB never ever managed to even get to zero rates during the last business cycle, which was the longest business cycle. Now they cut rates further, and there's no end in sight. I think that's probably the most fascinating takeaway, and which maybe is very much supportive.
I'm gonna skip through a little bit. I think
there is no path.
All right, here we go.
Environment. Let me ask you this, Michael. I mean, obviously, Bitcoin is the biggest market cap cryptocurrency out there right now. Ethereum is the second one, but there's thousands of others, right? And what I think everybody can observe that these thousands of others, I'll let you get your take on them. I mean, ultimately, in 2000, as you said, we had multiple tech companies that came about that did really well for a while until they all blew up. And then there were some winners, and some of these winners, they gave you also incredible drawdowns. You mentioned Amazon. Amazon at some point, and this is obviously all
95%.
95% down. If you bought 150, I mean, these are the prices now with the the flips and the shares, but it was 115 in 2000, and it dropped to 5. So if you drew that down, you were crying. I mean, you were absolutely crying, and if you sold anywhere along the way, you're ready to jump off a bridge now, right?
And if you did, yeah, and if you just held your position, you became the richest man in the world.
Exactly. So,
the richest man in the world held through a 95% drawdown, and that's why he's the richest man. He's the richest man in the world, and his wife is the richest woman in the world, despite themselves, by just holding on to digital retail.
I think that's important, and I know you guys have heard that before, right? Amazon went through a 95% crash. And the point of this story is that had you held, right, you didn't panic sell, you continue to maybe even DCA, like Michael did, and you continue to do so, you would have amassed a fortune, including Jeff Bezos and his ex-wife, right? So I think that's the point of that. It's the same thing with Bitcoin. There's so many naysayers that say, well, had you bought at 20,000, right, why would you wait and sit it down to 3,000, right? There's so many people that'll tell you that. In hindsight, they'll say, well, you should have sold at top, right? But no one really knows. No one really knows when the top is, when the bottom is. But if you stretch out your timeline and then you realize, well, had I just held, I would have done just fine. But trust me, so many people in 2018, 2019 panic sold because they couldn't take it and they had to buy back in probably in 2020 and 2021 had they just held or dollar cost average like some of us did. Yeah, it was painful at the time, but now at 34,000, right, this is 11, 12x more than the bottom from just a few years ago. So that's the whole point of this, right? Everyone that is not a long-term holder will always look at things half full. They'll say, oh, look, you could have sold at 64,000. You could have bought back in at 34,000. Really? Really, Sherlock? Really, genius? Did you do that? Or you're just miserable so that you're trying to bring everyone else down, right? So I think this is very important. Anyways, let's go get to another point that they're kind of going on a little bit. But let me play this a little more.
And his parents killed it, obviously, as well. Good play. But that's, I guess, it would probably be fair to say that's kind of your view on Bitcoin. You don't care about a 90%, or maybe 90% is rough, but let's say a 50% drawdown, as we just seen. You know, whether it's 20,000, 30,000, 40,000, don't care if your view is long term that this is going to be something much, much, much bigger than it is now. Is that fair to say?
I think that the people that invest in Bitcoin as traders and they don't have a technology view or the macro view, they're always going to be disappointed because of volatility. If you take the macro, you know, there's almost like four sets of people that buy Bitcoin. There's the ideologues. They buy Bitcoin as an expression of freedom and property rights and truth and justice. Right. And you get some of those, the Bitcoin maximalists. You've probably felt the sting of some of them sometimes. And
I got mobbed.
Yeah.
I got mobbed.
So there's them. And from their point of view, it's just right or wrong. You're either on the right side of the history or not. And they have a long time, call them 100-year time frame. Then you have the macroeconomic buyers. I bought it as a non-sovereign store of value monetary inflation hedge. Well, and I've got a long time frame. I'm looking out 10 years. As long as inflation keeps coming, I'm holding, you know, and it's like X% of my portfolio and I'm just holding. I'm not using it to buy coffee next week or pay my bills this year. They're okay. If you have strong macroeconomic conviction, when you start thinking about what happened to people in Lebanon, Syria, Argentina.
I'll stop right there real quick. So did it sound like he just separated himself from Bitcoin Maximus? That's what it sounds like. He was identifying four types of people. First is Bitcoin Maximus. The second is hedge against inflation people. So he basically just separated himself from Bitcoin Maximus. Although we know he's still Bitcoin Maximus, I just thought that's funny. So
in Venezuela and Zimbabwe, by holding a weak currency, it stiffens your resolve, and you think, I don't want to be that. I want to hold a strong currency or a strong asset. So they're okay. Then you've got the technology investors. If you think Bitcoin is dematerialized property, and it's demonetizing land and gold and other monetary indexes as a long-term fungible store of value. You've got a 10-year time frame. Like most of my bets is like I bought Amazon, Apple, Google, Facebook, thinking that a decade from now they would be much bigger, and it turned out to be true. And they had volatility. So you're a 10-year investor, right? And then the last category is trader, speculator, trying to figure out the ratio of Bitcoin versus equity versus altcoins versus something. Well, they're just, continually back and forth, buzzing this way and that, and you have your good days and your bad days. But that is a recipe for anxiety, unless you have some proprietary models and proprietary access to liquidity flows, and you understand all this and proprietary algorithms. I wouldn't recommend that the 95% of the population get into that, because it's just going to give you anxiety. So my views, are generally in that technology macroeconomic range, and I do have to admit, I view Bitcoin as an economic imperative because everybody needs a non-sovereign store of value inflation hedge. I view it as a technology imperative because I think that the most powerful idea is putting digital property into 8 billion iPhones and
All right, we'll stop right there. So 4 types. He identifies himself as 2 types, but he does say that traders are the ones that have the most pressure and the most anxiety, and that is definitely true. If you're trying to time top or bottom every single day, every single week, and this is what newcomers come into the market, this is what they want to do. They want to utilize that leverage, which he talks about in a little bit, and utilize leverage and try to time top and bottoms and try to get rich quick. All you're doing is setting yourself up for failure. The best way to trade this is really become a tech investor and also look at it as a hedge against inflation, right? So, or a Bitcoin Maximus if you want to, but it's just funny how he kind of separated himself from Bitcoin Maximus. Anyways, I'm going to skip through a little bit. I believe this is the question that is very important. And this is a question that a lot of you guys have asked.
Well, but there's also unfortunately the side effects of misinformation that is spreading. That's kind of harmful, as we see in our politics, which are dreadful in general. And division in societies are expanding, and I'm actually tying this to increased wealth inequality.
Maybe this is not
all the things you mentioned earlier. They all tie into basically, because we are so awash with liquidity. And some of it is, yes, is investing, some of it is macro, but a lot of speculative stuff. And I've seen it on Twitter all the time. I see people talking about, being all in on taking out loans. And wow. It can work if you're lucky, but it can also go really badly against you.
Yes.
And to the extent that you have a system, a trading system that becomes over leveraged,
yes,
you have always the risk of these blowouts, these capitulation blowouts that exacerbate the volatility, which is kind of ironic when I look at the original paper that Satoshi wrote. Right?
He basically said what I've been saying, right? Like when you have leverage, especially with a mostly unregulated market, right? You have a lot of exchanges out there that's pushing leverage. And when you have leverage, not only do you have the ability to wreck yourself, but wreck the entire freaking market, because if there's a cascading short, let's say, short calls or long calls or short squeezes or long squeezes, you have volatility. There's somewhere in there, I know I'm kind of skipping along, but there's somewhere in there where Michael was asked by Mr. Henrich, like, why do you think there is so much leverage? And why do you think altcoins and Bitcoin tend to move at the same rate? Because that's something a lot of you guys have asked about, right? Why is there such a correlation between Bitcoin and altcoins? Well, Michael's answer was leverage. That first of all, you do have a lot of leverage everywhere. And when you put leverage, you can move tokens or projects or coins really, really fast. When you have 10x leverage, 20x leverage, 100x leverage, That doesn't really exist with stocks, right? You have margin, you have options, but not like 100x leverage. And when you have that and 24/7 trading, you can move from one to another really quickly, right? And that's why there are pumps, there's volatility, and also you could spread them out with bots and so forth. So then you could kind of correlate all of them. But the end thought is leverage is not good. It's dangerous, and this is what he was saying. So that does play into what we're seeing right now. When you have a whole bunch of retail people coming in, try to day trade, try to utilize leverage, well, when things go sour, what do? They all panic sell or they got liquidated, and that's what we're kind of experiencing right now. All right, so I'm going to fast forward a little bit. There's a couple things in here, but it's kind of hard to time because it was asked in between a couple different sections. So I think one of the big points that Mr. Henrich was about to make, I think he may be making it with this. Let me play this. Because there's a lot of cut out in our parts, but let me play this. It might be this part.
Right, about what Bitcoin is supposed to be. There was none of that there. It was literally a cash-based cryptographic proof event where you can transact peer-to-peer. There was no discussion of store value or any of the sorts. I'm kind of curious how that has been morphing, especially in context of one particular thing. I mean, all these cryptocurrencies are pretending to be currencies in a way, right? I mean, Bitcoin originally was supposed to also be a currency. And I'm studying on the space, if you will. So I'm looking up some data points. I'm a data guy. I like to look things up. What really surprised me, and I had no idea about this, I was pulling up some charts in terms of transactions per day, in terms of actually volume.
For integrity and durability in it, they currency is a misnomer and it creates massive confusion. And I think people in the space are confused. I think people out of the space are confused. And I think a lot of people that speculate in it, they speculate just in these things without having a long-term thesis about what they're doing. Here's the way I would segment the space. 4 quadrants. You have digital property. Bitcoin is the king of digital property. It's optimized for integrity and durability over long periods of time. The idea is I want to take $1 million, buy Bitcoin, and I want to hold it 100 years, maybe 1,000 years. Imagine owning a city block in London. Your family owns it 300 years ago.
Okay, I'm going to stop right there. I know you guys have heard this a lot, where he makes a comparison. Now he makes a London block rather than a Manhattan block. But basically, Bitcoin versus everything else. Bitcoin is a property. Everything else is like what's on top of the property. Could be exchange, could be a house, could be something else, right? The funny thing is, you know, at the very beginning of this interview, Michael said that he's a tech investor. He looks at tech. And that's exactly what crypto is, right? Besides Bitcoin, everything else in DeFi, in NFT, right? Everything else that's coming out, that's like getting in early, right? Getting into early Google and Microsoft and Amazon and so forth, right? So now, essentially what he's saying is, I'm a digital property buyer. I'm not a digital tech buyer anymore, right? So it's kind of funny that way. It's kind of funny. I know Bitcoin is still technology, but basically he goes on and explains why he still wants to buy Bitcoin, because long term it's the surest thing, because it's like buying a London block or a Manhattan block, and it's going to stay for basically forever, right? But it's kind of funny where he's kind of pushing aside DeFi and everything else, which he does clarify later why he does. But it's kind of funny, if you're getting into tech or you're trying to get into tech again, right? Who are the next big powerhouses of the future, right? We're all speculating right now. Could it be Cardano? Could it be Ethereum? Could it be VeChain? Could it be Polygon? Or maybe some of these swaps, like Uniswap or PancakeSwap. Can they be the powerhouses of the future? Maybe. But that's why you want to get in early, right? You don't want to get in later. So why would he discount them? So it's just kind of curious, about that. But anyways, he does go through. I'm going to kind of wrap things up. I know it's been a little bit, and if you guys want to watch this, I will post this. It's an hour and 50 minutes. But he does say that he was asked about regulatory concerns, which is something that Mr. Henrich is very concerned about, and he does say why he's sticking with Bitcoin, because it's digital property. And there are certain expectations with digital property, such as paying capital gains tax and KYC, but it's a lot less concerning than, say, DeFi projects, because if the governments are cracking down futures and derivative trading on centralized exchanges, why wouldn't they crack down on the same thing that's happening with DeFi space, right? So he's looking at it from that perspective. Regulatory concerns is a concern, but it's less concerned with Bitcoin versus everything else. So that may answer that question. And also, he was asked about inflation, the inflation hedge that Bitcoin claims to be, or Michael thinks it is. Why does he think that it is? It's unproven. We haven't seen Bitcoin really act like a hedge against inflation. And Michael he didn't really answer that well. The only thing I would say is he went off. I take that back. I don't want to put words in his mouth, but you guys watch and determine. But basically, he talked about the most popular monetary assets out there, and he sums it up. Number 1 is USD. Number 2 is Euro. Number 3 is Bitcoin. And when everything else is inflating, like the USD and Euro, right? What's the obvious option next? It's Bitcoin, right? So that was his answer to that. But anyways, that's all I want to say about this video. It's interesting. I think the beginning was very interesting. It does show you that he has that investor mentality, and he is diversified. That's for sure. Maybe things have changed where he really is like 100% in Bitcoin, but it sounds to me that he's very well diversified in other things. And some of the things he talked about is also pretty interesting. So there you go. I still want Michael to come on the show. I'm going to tweet him. I think the key is to tweet something negative. Then he'll be forced to respond by coming on the show, like what he did with Ben. What's the interesting thing is, it's obvious that he respects, I think, Mr. Henrich more, because after this interview, he tweeted it out on his Twitter. But I noticed he did not tweet out the interview with Ben on Twitter. So it does show that I think he respects Mr. Henrich more, although I don't know why. Maybe because he's a veteran trader, and maybe because he's a highly respected technical analyst. Maybe. And, who knows? So hopefully, if he does agree to come on my channel, he's going to be lighthearted and not too confrontational, and I'll ask him some good questions, and hopefully you guys will enjoy it. All right. Outside of this interview, what else is there? Overall market is still doing pretty darn good from this morning. Bitcoin is coming up 34.6, trying to break that 35,000 mark once again, heading into tomorrow, of course, the 4th, Monday, long weekend, low volume, right? So we'll see. We'll see if this volatility could be positive and push Bitcoin back to 40,000 again. That could happen, but overall things are just holding pretty well right now. All right, I guess that's it. The only other thing is I do have a new sponsor today, a brand new project. For those of you guys that are Thorchain supporters, a lot of you guys have asked me about Thorchain. A lot of you guys have asked me, well, what is it about? Well, Thorchain is really like a giant liquidity play, like an AMM, but there is a brand new project within this Thorchain ecosystem, and that is Thorstarter. And with the name Starter, you could guess, right? They're trying to be like a launch pad for new projects that's going to be taking advantage of Thorchain and jumping onto Thorchain. So they are Thorstarter. Sounds like Polkastarter and all these other starters, right? But they go beyond that, because Thorchain is a little bit a little bit hard to understand, but basically that is cross-chain liquidity for several chains like Ethereum and Binance Smart Chain and even Bitcoin, right? But those are, it's limited. So Thorstarter not only is a launch pad for new projects, which they can sell IDOs, but also they're acting as like a relay, which means that now you can have new projects that also can provide liquidity within Thorchain. So they utilize this new token called XRune, and that's what they do. Thorchain uses Rune, Thorstarter use XRune, and there is a new liquidity pool for Rune and XRune. And now new projects that come on board say they want to provide liquidity and they don't have enough, right? Thorstarter will help them with that with this XRune. So it's a little bit confusing, but they call it short tail versus long tail, right? And short tail is basically trading assets like BTC, ETH, and BNB. But long tail is basically at new assets that's coming on board, and it's going to help them integrate and provide liquidity so that people can trade it and also get invested in it and get into them. So that's what Thorstarter is all about. They just launched their public sale on SushiSwap, but later on they will be having their own DEX, their own AMM. So if you're interested, check them out. Their URL is in the description of this video. All right, guys, that's pretty much it. Let's do some Q&A. Buford said, Jerry Gensler thinks Ethereum is a security. Well, the SEC already declared it was not a security. So it'd be very silly that he says it's a security or he's going to redo it as a security. That wouldn't make a whole lot of sense. So I don't know what's going on there. I don't know if you just made that up or that's real, but he has his hands full. He has to decide all the new Bitcoin ETFs. He's deciding a case against Ripple, right? There's a lot of things that's going on that's on his plate right now. Starlord asks, what do you think of countries hold BTC not spending? Cardano better? That the two doesn't even... What does that have to do with countries holding BTC, I guess? Is Cardano better? Better for what? Better for dApps? Better for DeFi? Yes. Better store value? No. The two doesn't compete with each other. I think, again, I think a lot of people think that altcoins compete with Bitcoin. They do not. They serve different purposes. So Cardano is a great project, but it does not compete with Bitcoin, nor does the Ethereum, nor does Binance Coin, nor does Dogecoin. Have you ever covered Sovereign? Have I talked about it? I think I talked about them. I forgot what they are. Decentralized Bitcoin trading? Yeah, I have. It's like a DeFi play on top of Bitcoin. It's like a layer 2 for DeFi that's supposed to be on top of Bitcoin. I've seen it. I've heard it. I don't know. I just don't think it's that efficient on Bitcoin, although some people will argue that. I think there's just a lot of DeFi plays that's already existing fine on Ethereum and others. So that's my opinion of that. AMP is terrific. Having a shot just for me, well, have one or two or three. What else is there? I like to put a good amount of funds in BlockFi, but it's not FDIC insured. Should people even concerned? There's nothing in crypto that's FDIC insured. And FDIC insured is only up to $250,000. Just FYI. you know, the reason why I trust BlockFi, first of all, they're in the U.S. Second of all, they use Coinbase and Gemini's custody service, which both have insurance against hacks and you know, anything that's bad that happens, right? So there's still a risk. There's always a risk, but I think if you put in BlockFi versus others, the least riskiest. Thoughts on Digibyte? How high could it go in 2 years? Dustin, no point. No point of trying to guess price. Digibyte is a good project. I think they're layer 2, and their layer 2 adds in smart contracts, ID, services, possibly even NFTs down the road. That makes a very interesting project. Very interesting project. So as the market goes up, they will too. They will too. GameSpot, I talk about Stellar all the time. There's not that much to talk about with Stellar. There's an NFT marketplace that's launching. They have USDC that launched. But primarily, they're still kind of like a medium exchange, right? Although they're trying to get more into like the smart contracts kind of thing. But they're kind of just hovering, you know, so not too much excitement going on. Honestly, though, if Cardano has limited supply as well, does it theoretically also make a store of value? I guess, but it's just not the same. It's not the same. I guess technically anything that has a limited supply could be seen as a store of value, right? Technically. But there's a lot more of it, right? And the use case for it is supposed to be a utility, not something that everyone holds. If everyone holds ADA, that would actually not be good for the projects, because then it would be, you know, the fees would be astronomically high and nothing could operate because you need to use ADA to pay for things. And it actually would be, if you think about it, if it was treated just as a store of value, it would actually be bad for the ecosystem. So, but technically, I guess you're right. Maker's been around for a while. Would it outperform ADA? No, I don't think so. 24-hour volume dropped a lot. Why? Because it's July 3rd, a day before 4th of July. Thoughts on Ramp? I haven't done a deep dive on Ramp yet, but I will. I know you stress a diverse portfolio. Do you see anything wrong with me just DCA into VET until it blows up? No, there's nothing wrong. But there are times where VET also doesn't move and is very stagnant, and you're just, you know, you could be missing out by not having a diversified portfolio. So, Starlord, as citizen countries who are supposed to spend BTC hold it, it would make more sense for them to find another cryptocurrency that acts as a currency instead of BTC gains. Yeah, but there's no guarantee. I mean, you're making an assumption that most people will hold it, right? A lot of them will actually spend it, but I think you're on the right path, right? Wouldn't it be better if, I don't know, they were using something that was supposed to be a store of a medium exchange, right? I guess technically, but I think that's part of the reason why El Salvador wants people to use Bitcoin. First of all, it's digital property, like what Michael says. It's the most trustworthy, least risk. But also, the citizens that are actually saving Bitcoin could actually attain life-changing wealth by doing so, right? So it serves two purposes. So I think that's kind of the point. Are you upset with Electronum? This is a good project. I'm not upset. I've said I like what they do. I'm just upset at the leaders or people who are in charge of social media that said that they don't want me to help promote their product for free, by the way, just bring more awareness. But I do think they're on the right path to help people with the unbanked. And they're just task website or job microgigs website is good. Do you think Adam will be here a long time? Do you think Gravity Dex will help increase? I do think so. I do think so. What else is there? Is there a DCA out plan during the bull run as well? Not all of us are billionaires. We probably won't hold our whole bags until we pass. Well, you could try to time top, right? As we get closer to the end of the year, as Bitcoin surpasses 100,000 plus, you could start taking profits if you don't want to hold through the bear market. And there could be a bear market, but it's kind of hard to guess when top is, especially going forward, because right now the environment has changed. We never had countries get into Bitcoin before. We never had public trade companies get into Bitcoin before. We never had institutions get into Bitcoin before. We never had Bitcoin ETFs exist, right? So with all that said, this next top may be very different. Maybe once we hit 100, 150,000, yeah, we come back down 50, 60%. But then maybe we just start recovering again, right? Maybe the 4-year cycles could be different. So that's where DCA will definitely be advantageous versus trying to sell at top and trying to buy at bottom. All right, last few questions. I'll let you guys go. Algo, only good for staking and Coinbase. It's not the only good thing about it, but if you have it, why not? Earn some interest. B-Pro looks like it's going to skip the bull market. Chart doesn't look good. It's a good project. Looking at chart right now serves you nothing. No good. No charts right now look good, okay? Just know that it is a good project. And when you're making assumptions, go skip the bull market, that's nonsense. That's nonsense. Do you think Lincoln's going to go near 700 range? I said that before. If Bitcoin goes up to 200, 300,000, yes, it will. Is BTC absolutely essential? Yes. I think, yes, it is. It shows you when things are doing well, it does well. When things are doing bad, it also does well, at least against altcoins, right? I do think having 50% of Bitcoin is essential. All right, guys, that's pretty much it. Thanks for tuning in. Hopefully you guys enjoyed this interview. It's a little bit longer, right? But I do think there's new things that you could learn. So I am going to put the URL in the description. I forgot to do that ahead of the stream. So check it out. Right, I do think this one is more relaxed, more educational, very different than the confrontational one with Ben before, which I just thought it was just really weird. But I think you guys will learn a lot. And if you guys like Thorstarter, check them out too. All right, guys, have a good one. I don't know what my schedule is tomorrow, so follow me on Twitter. I plan on still streaming morning. I don't know about night, but at least one stream. So follow me on Twitter so you don't miss out. All right, have a good one, guys.